Hello, everybody. So it's 11 a.m. and I'm currently looking at gold. So in this video, we will be talking about a trading model that is super easy for beginners to follow. I have been creating a series of videos around the two-step model that I use. I use these for multiple securities, but I'm doing these videos based on gold just because it's super interesting. So in the previous video, so yesterday's video, I will link it either in the video or in the description. I talked about how this level here, so I'm just going to change this. All right, let's go to the 20 hours. I talked about how this level here was going to likely give us a lot of pressure, right? So we were unlikely to go higher because we had this fair value gap and we also had dynamic resistance. So I said, if you're long here, you need to just get out. Now, this green line here was the original TP, but because of my analysis yesterday, I said it's likely we are not going to reach it. So what have we done? Well, you can see we've stopped and we've now come right back down. We have SMT below here, but we also have SMT above here as well. Okay. Now, I mentioned the two-step model. What is it? We just need two parts to this. We need a directional move and then a retracement. That's it. So there's 5 steps really, if you want to be precise. Once you have directional move, so you have it here in this larger trend, and you have retracement. Again, you have it here in this larger trend. We start to look for opportunities at point C. This is point C right here. So this is your point A, this is your point B, and this is your point C. This is where we hunt for trades. So usually I go to the 1 hour or the 4 hour, it depends. And the first thing I really look for is SMT, which we have at this level here. We also have SMT actually here as well. So just bear that in mind. But I'll talk about this in a second. Once we have SMT here, we check that that level also overlaps with a fair value gap, which we already know it does. And a fib, we already know that does as well. So if we go back here and we look at this larger, so you can use this level here to this level, and you can see that's hitting the, let me just change that fib properly. Okay, so you can use, oh, let me just use this one. This one's fine. So you can use this level here, or you can use this level here. Doesn't really matter. If you use this level here, we had a 50% fib. If you use this level here, you can see that we are just hitting that 60 fib level, right? But we're still at that 50%. We haven't really expanded away from it. So we've got SMT, we have fibs as well. There are other things you can check for. Those are the kind of the two main ones. On the 1 hour or 4 hours, you just look for a structural shift. So we have this high, this low, this high, shift. Once this happens, what is this now, this leg? What is that? Based on the two-step I've just explained, what is this leg? It's a directional move. It's a lower time frame A to B move. A, P, directional move. And what do we expect after a directional move? A retracement. It's only two steps, directional move and then a retracement. So we run our fib from this high to this low. And what level is this? 50%. It's the same sequence. It really doesn't matter which time frame. So here, I'm already short. So here I'm hunting for trades. Same process. What am I looking for? SMT. Well, we have SMT here with silver. I think the SMT is on the 4 hours. So just give me 1 second. I will just grab this, go to silver. So this is 4 hours. And if we go to 4 hours here, so you can see how silver here makes a higher high and gold makes a lower high. Okay, that 4 hour candle has not closed yet, but I'm anticipating the opportunity. So there's no need for me to wait. So let's go back to the 1 hour. Let's go back here. All right, so I was already short from here, right from there. Okay, we have SMT, we have fibs. Let's add the fixed range volume profile, right? We're hitting that point of control. Now, for me, what else do I need? Nothing. I just need to go short. So I'm already short. Already short. And because I trade over a series of days and weeks, my target is actually quite far. So if I go to the daily, this low is my initial target right here. But actually, I am targeting this level, green level here, overall. Okay, I'll explain that later, but for now, the key is just following the two steps. Step one, find the A to B leg. So in this daily chart right here, again, you can use any time frame that you want. I like to use the 20 hours. It's just not too big, not too small. So this is my directional move. This is my retracement. And all I'm expecting now is delivery. So what I could do is take the fib, run it like this, and just grab it and extend it. That gives me my initial target there. So I could grab this and I could say, well, this is 100%. But there are other ways you can uh, set your targeting. That is the standard way, using a measured move. Price will often get close to it. Sometimes it may not reach it. Sometimes it'll reach it, and sometimes it'll exceed it. I'm expecting it to exceed that level because I'm looking at this whole move actually based on the monthly, not the actual 20 hours. So I'm expecting um, a move down to this level, which I believe is the 50% of this entire up move, I guess. If I run it from here, I can run it from here. If I run this move, let's see, 70 fib. So that's it for this video. Hopefully you found something super interesting with the model. Thanks for watching. I'll see you in the next video.